But yeah, overall, like 9% in a month with any strategy is great. So yeah, I'm excited to share this new ICT model with you guys. For those of you that have never watched ICT videos, I'm going to save you a whole lot of monologue from the video he recently shared going over the model, and to really just break down the simple components of it, which I've shared in the strategy PDF that we'll be going over. But yeah, this is, I guess, his new model for 2025. And he's had some good ones. Judas model, unicorn model. This is another one that looks pretty promising, and it's actually probably the closest thing to the model I trade that I've tested so far. So I actually have a little bit of experience from trading a similar model, and I'll kind of use that a little bit to show you guys some tips as well. But yeah, with that, we'll go ahead and dive into the strategy PDF. It's in the chat, and then if you guys are watching this on YouTube, it should be in the description. You can just put in your email, and it'll get it to you for free. But yeah, the strategy honestly isn't like too complicated. I was I was actually a little surprised. Sorry, I got my trading view alerts going off. I was actually like pleasantly surprised when I reviewed this that it actually isn't that complicated. And hopefully will be a simple strategy that a lot of you guys can at least start backtesting, and maybe some of you actually start trading it as well. But really, like the bread and butter of this is 1 minute time frame on a NASDAQ. Really, any scalping strategy 1 minute or lower, you really have to have highly liquid pairs with pretty low spreads. So it's going to be mainly indices. It might work with the other indices and gold, or this might just be like a strategy that works best with NASDAQ. Again, you can test out kind of anything, and it's only a 90-minute window that you're trading every day, which is kind of another cool thing about this strategy. So we're only going to use a couple indicators on our charts. We'll use the session indicator. If you're an FX replay, this will be the session indicator in New York to mark out basically the first 90 minutes, kind of pre-market before New York opens, so 8 to 9:30 a.m. Eastern. And then we'll also use a fair value gap indicator to make sure we can see the fair value gaps. And really the only, like, I guess, technical analysis component that you guys need to learn for this is something called balanced price ranges. And for those of you that have never heard of these before, it's essentially just two overlapping fair value gaps. As you can see here in kind of both of these images, as price comes to the downside, there's a gap. Like these wicks kind of before and after this candle are not overlapping, and that forms kind of a bearish fair value gap. And then as price comes back to the upside, we have the same thing going on. There's no overlapping wicks kind of before and after this candle. So there's basically overlapping fair value gaps. And this is a ICT concept called a balanced price range, where kind of the area where these are both overlapping is kind of the balanced price range. And then, yeah, again, not too complicated of a strategy. You're basically going to mark out 8 to 9:30, mark out the high and the low, like pretty simple. And then once the market opens, wait for one of either the high or the low to be taken out, look for a balanced price range, and you're just simply going to enter on a retest of that balanced price range. This is really the specific entry he goes over in his video. And for the entry and stop loss, again, it's just a limit order on the retest of the balanced price range. So kind of if you visualize in here, if we were looking at for a long, as price came down to this balanced price range, that would be our entry. And then stop loss is going to be kind of the recent higher low. You can kind of see a couple examples here for both a long and a short. And so I think to keep it the most simple, I'm recommending just like a fixed 2R TP, no trade management. If you are a ICT student and you're more comfortable identifying high time frame draws and stuff like that, you can potentially target the other side of the 8 to 9:30 range, but you're probably going to want to backtest on, what trade management do I do in terms of like trailing my stops or, anything like that to, invalidate the move going all the way down there, because it definitely doesn't go all the way down there every time. But yeah, for most of you, I really just recommend entering on a retest to the BPR and just target 2R. Keep it nice and simple. The second entry trigger that I came up with isn't something ICT talked about at all. I want to be clear about that. Like, this is not, I guess, a core part of his model. So you could ignore this, or you could also incorporate it into your testing. You could use the tags within FX replay to kind of differentiate, but a lot of times you don't get a retest. Like, it kind of forms that balanced price range and just takes off. Like, you never see a retest, so you miss a lot of trades just using this BPR retrace. So I have kind of a similar entry trigger with the strategy I use, and it's based on kind of a engulfing candle breakout. And so what this looks like, and I wanted to like really kind of help you guys visualize this because it's a pretty specific trigger you're looking for. So as prices coming to the upside, we have our initial bullish fair value gap. And if we see an engulfing candle that, closes past this entire previous candle, it's different color, and it fully inverts this previous fair value gap, then we potentially have what I'm going to call a Venom Breakout trigger where you can literally just market enter at that point and just use the open of this candle as your stop loss. So it's a lot like tighter of a stop loss, but it's nice because you don't have to worry about the retest. If it doesn't come back, then you're at least like still get into the trade. But I want to go through a couple examples of where where these aren't valid. So this first one, it is an engulfing candle, like it's a green candle followed by red, but it doesn't invert this fair value gap, so this wouldn't be a valid trigger. The second case, it's red on red, or vice versa, green on green. It needs to be the opposite color candle to be like a quote-unquote engulfing candle, from everything that I've learned. And then kind of this last example, the candle did invert the fair value gap, but it didn't engulf this previous. You can see the wick low of this previous candle was a little bit lower than where the kind of red candle closed. So it has to be an engulfing candle that is a different color that inverts the fair value gap, and at that point you can just do a market entry. So just market enter when that candle closes, put the stop at the open of the candle, and just targeting out a fixed 2R. And same commentary as the first trade, you could potentially go for the other side of the range, but I think using a fixed 2R is a lot simpler. A couple other rules, and then we'll go through quite a few examples. I've already started testing this a little bit, so I'll kind of just scroll through the backtesting I've already started. But a few invalidations, I guess. So sometimes, like I said, the retest doesn't happen, and if the price hits your 2R take profit level like before a retest happens, then it's a lot lower probability because kind of that the move has already happened essentially. So one rule we're going to have is if you're looking for that BPR retest and it already like kind of takes off and hits, where your take profit would have been, then just cancel the limit order at that point because it's going to be a lot lower probability. Also, if I don't know, I'll show you guys an example for this one specifically, but maybe the BPR doesn't happen for a while, so it's kind of like it's already come back quite a ways, and if you kind of project out from the entry to the low, like if 2R is further than the other side of the 8 to 930 range, it's also going to be a lower probability because it's, a pretty significant move. And so same thing, if you can't get 2R at least at or before the other side of the range, you're not going to take those trades because they're going to be lower probability. Don't take a trade right before red folder news. You're hitting on the 1 minute time frame, so you're probably going to get stopped out if you're entering like right before a red folder news event. And then I've tested this quite a bit with the model I use, and it's usually okay to take 2 attempts at this. So if the first one stops you out and then another setup shows, you can go ahead and take the other one. I recommend when you're backtesting to use maybe a second attempt tag within FX replays. You can see kind of isolate those and confirm that it is good to take them. But from my experience, it usually is with a model like this. Yeah, a couple less considerations. Maybe 9:30, 11 New York session is just a terrible time for you, or you at work or something else. You could potentially backtest this with other time-based liquidity levels, such as previous session highs or lows, previous day highs and lows, previous week highs and lows, or even just like relatively equal highs and lows that you see on the chart, rather than this specific 8 to 9:30 window. I can't, obviously, ICT's models was pretty specific to this, but he also was showing some examples taking this like in the PM session during New York. So there's definitely other times of the day where like this entry model can work that you can backtest. Maybe you could also test this in other sessions, like the same kind of 90 minutes before market opens and 9 minutes after it opens. You can maybe test a similar model with Asia and London session and see if you get decent results with that. Just trying to give you guys some flexibility if this kind of core early New York session isn't good for you. At least you have a few other options to at least like try. And then lastly, like a trailing stop loss might improve results because again, it does sometimes go quite a bit further than that 2R. But I think that's a good level to start with. So let's look at a few examples. And I think I'll show you guys a couple I've got in the PDF, and then I'm going to scroll through FX replay. So in this example, we come into the day, 8 a.m. was a little back here, so the high and low were marked out with these two kind of horizontal lines. So we kind of came into New York open, we swept the 8 to 9:30 low, and then you can see we formed a bearish fair value gap here. And on this big candle here, there's basically an overlapping fair value gaps in this section right here, where this kind of previous fair value gap overlapped with this super large fair value gap. So simple limit order on the retest, stop loss at the low, and target out a fixed 2R TP. I think this one did end up barely tagging the other side of the range too, but really nice and easy kind of 2R TP on that one. This one, there's a loss and a breakout. So same thing, came into the day. We had the high and the low from 8 to 9:30, and then price trended up pretty far to start the day. And we had a balanced price range formed from this bullish fair value gap right here that overlapped with this bearish fair value gap. And so right here, you would have entered on a retest. And unfortunately, this one took out kind of this low and then reverse. So I've seen quite a few people that use models similar to this. They'll like look for some kind of internal low to maybe go break even after at some point. So whether you look for internal lows to go break even, or maybe after 1.5R or something, that's again an optimization you guys can see if it improves the results or not going break even. But just for today to keep it simple, I'm not doing any trade management. So this one would have been a loss, unfortunately. But then shortly after, we had a bullish fair value gap, and this is the breakout that I'm talking about. There was no retest of this BPR, so you would have like just missed this trade, or potentially even had a loss. Yeah, it would have been a no trade because it did run to the like 2R before. So using our breakout like market entry here, we were able to still catch this move. And so we have this bullish fair value gap, and then we have a really nice engulfing candle here that inverts this whole fair value gap. It's a different color of the previous candle, and so you just do a market entry at that point with the stop at the open of that candle and target out 2R. So I'm going to go through a few additional examples. Let me know in the chat if you guys have any questions. This is the one we just went over in that kind of second example. Like I said, I just started testing this like through the beginning of 2025. So I've gone through a few weeks at this point, and I want to show you guys a few invalidations. So this day it took out the high, but there was no BPRs, so you couldn't really enter anything on the short, even though the price action played out. Let's zoom in here. There was a BPR for a potential long, but if you were gonna take this one, you can see here you would have had to target out like all the way up here for your 2R, and it's way above the kind of 8 to 9:30 high. So this is where I'm talking about, like if you have to go beyond the other side of the range for your take profit, there's going to be a lot lower probability, so you won't take those trades. Again, another case where we had a very super small BPR down here that wasn't retested, and it hit the take profit before there was a retest. So you're just going to just cancel the limit order on these trades. Otherwise, you're going to catch a lot more losses from these. And the same thing, again, there was a BPR, but the entry would have been after 11 a.m. So we wouldn't have taken a trade. So there was potential, like 2 or 3 potential trades this day, but none actually taken because of the invalidations. Let me scroll through the next day. This is a pretty simple long. So we had the high and the low here. Nice BPR formed after this candle right here. We have overlapping fair value gaps on each side. So simply enter on a retest, use the low as the stop loss, and target out 2R. Ultimately ended up coming here, but yeah, nice win on that day. See a couple more examples, and then we'll do some live backtesting to just kind of see some more stuff. No BPRs, unfortunately. Were some fair value gaps, but none on the other side. This one, there was a BPR at like 2 minutes before high impact news. But again, you don't want to take a trade on the 1 minute time frame right before news. You're basically flipping a coin at that point. So let's see a couple more examples in this day right here. Actually, this is the one I went over in the chat, or in the strategy PDF already. And then same thing, this one had already hit the take profit before. So let's go ahead and fast forward to kind of the last place that I stopped. Basically, yeah, a couple weeks into January, and just go through some live examples of the backtesting. So coming into New York Open here, we want to mark out our kind of high and low, and I guess I'll kind of show you guys what I have on the chart here. I should have done this already, but I just have this session indicator New York. I'm technically using like a London session to kind of show the 8 to 9:30, so I just put 8 a.m. to 9:30 a.m. for the quote-unquote London session, and I think I changed the color a little bit, so you can put it whatever color you want. But this is basically how I'm going to visualize the high and the low from 8 to 9:30. And then I also wanted to make sure I stop at like 11. So I've got these New York session lines to stop after like from 9:30 to 11 as well, to help make sure that I don't take any trades after that. And other than that, we just have this fair value gap indicator, FX replay. So nothing too crazy. So you're going to play things out. When you're trading this, you can literally just set alerts at the high and the low and wait to see if either one of them hit. This day, we just chopped around the range the entire day, so you don't do anything. You just sit on your hands and go to the next day. For the go-to sessions, I just have New York and 9:30. It's basically go to New York Open at the start of every day. So mark out our low and our high. Let's see, right about there. Pretty much right at the high right now, so we'll probably sweep it pretty quickly. So yeah, if you have like a small bodied green candle after a fair value gap, like kind of get ready, because these breakouts, obviously they're market entries, so they are a little quicker than the other ones. So we'll see if we can get 2R from this breakouts. Place order, this is going to be a market order, and then the tags I've been using for this, entry trigger 2 for the breakouts, second attempt if he has to take a couple attempts, just so you can kind of track things separately in FX replay. And yeah, unfortunately, we would have got stopped out on the retest or the breakout. For this one, it went up, say 1.3R, but not quite 2R take profit, which is fine. Now we have another potential fair value gap right here that we can see if we form a VPR off of. We've got one up top. No bearish fair value gaps anywhere yet. All right, so now we have an overlapping. Now we have a VPR between this bullish fair value gap and this bearish fair value gap right here. So I'll kind of draw it out to show you guys what it looks like. So the place where these are overlapping is basically from here to right here. You can see this bearish fair value gap ended a little lower, but where it overlaps with this other one, that's where you want to mark out the BPR. So we'll have a entry on this retest right here. And again, could potentially do some optimizations. Do you want to use the most recent high instead of the overall high? But in his model, he recommends just kind of using the overall high. So that's what we'll do for this. See if we can get a fixed kind of 2R down here for a limit entry. Place order. This will be a limit order. This will be entry trigger number 1, and this is also a second attempt because we had a loss already, and we're giving this one a second shot. So play forward. We didn't quite get tagged in yet. Oh man, this might have just front ran us. Yeah. So unfortunately, just barely front ran us. We tagged into this bearish fair value gap, but not quite into the BPR. So we're gonna have to cancel this limit order because it hit our take profit without us. Unfortunately, it happens sometimes. It's just kind of how how the model works. So probably going to be it, honestly, unless we come all the way down here. I mean, it's close to 11. Yeah, there's definitely not going to be any more trades within like this kind of 9:30 to 11 initial window. We've kind of been chopping up and down around this range, just consolidating, not really seeing the type of price action we need unless we get a bearish fair value gap here. So we had a bearish fair value gap, but again, it doesn't it doesn't quite overlap with this previous candle. And even though this was an engulfing candle, it didn't invert this fair value gap. So again, still not a valid setup that we're looking for until here. So we finally have one. It's an engulfing candle that inverted this previous fair value gap. It's green and then red, and we got nice closure below. So this is an example of the breakout potential. So we'll go for 2R in this case. This is going to be market order. This is going to be entry trigger 2. And we'll see if we can catch something with this. Man, unfortunately, 1.65R. So yeah, most of these trades were not the could have profit or break even stat will be great for the analytics too. I think that shows you trades that go over like 1.2R and then come back on you. So if we have a lot of those, then like that might show us that okay, maybe we want to go break even after like 1.5R or something. But it's a lot simpler, obviously, if you have less trade management. So probably nothing else this day. We've only got a few more minutes left in the day. This could potentially be a trigger. It's a little bit of a stretch because we're going off a pretty old fair value gap back here. So we had this bullish fair value gap that we have now inverted, and it's a big engulfing candle. This was just a barely green candle before, so I'll give this one a shot. And then this is definitely the last one that we're going to try for this day. So another potential breakouts trade using entry trigger 2 and second attempt. Let's see if we can catch this one. Nice. So 1 win, 1 loss this day. Had the right idea with the first one. It just kind of went up a little bit further. It didn't, there wasn't actually a BPR formed in the end from this one. The kind of wicks ended up pretty much overlapping. So there wouldn't have been a BPR retest on this first loss. So if you're only taking those trades, you would have had no trades essentially for this day, because there also wasn't a retest up here. So the breakout, I'm assuming, is going to have maybe a slightly lower win rate than the retests, but it should get you in more trades than you would otherwise. So that's why I felt it was good to add that in as a kind of second trigger you guys can watch for. We're up a little over 10R so far in January, and January is often like not the best month to trade, so I would definitely take 10R in a month. So coming into New York Open, we swept this low already, waiting for a bearish fair value gap. Never got one. We might just kind of trend to the upside. We haven't swept this high yet, so I'm not interested in shorts yet. I'm seeing some relative equal highs here, so there's probably a draw up here, and then maybe we can look for a reaction after that. We're still hanging below the lows, so we could still have a long if we see bullish fair value gap form that overlaps with this. All right, it is pretty small, but as you can see here, we have a bullish fair value gap that overlaps with this previous bearish fair value gap. So we have a BPR retest in play right here. We can enter it right here. The only problem is I don't think this is going to be 2R. Yeah, it's only 1.44R to the upside. So if we were using a more recent low, if you backtest and do an optimization, testing the most recent low instead of the kind of overall low from the sweep, then this could potentially be a trade, but I'm going to say that it's not 2R a trade based on the rules that we've played around with. I do feel that there's a good chance it'll go up there, but just doesn't quite meet our criteria for this one. So let's see, still kind of chopping around. There we go. Eventually got the move up. Let me see, just make sure I didn't miss potential setup here. So as we were coming down, we had a bearish fair value gap and bullish fair value. There might have been a BPR retest I missed right here. Let me see if this would have been 2R. So if we would have entered right here, I still don't think it would have been, still wouldn't have been 2R. Both would have played out, but yeah, we're looking for just like fixed 2R base hits, and we couldn't have got it with these trades, so we just wouldn't have taken the long, even though it did end up playing out. The draw on liquidity might have given you some justification to give it a shot, but just using the mechanical rules that we have, there wouldn't have been a trade. Let's see, do we have an overlapping bearish fair value gap now? We have the tiniest BPR ever between these candles right here, so it is valid. And we've got 20 minutes left in the session. So now that we've taken out those equal highs, let's see if we can catch a little bit of a pullback here with a BPR retracement. This is entry trigger number 1. And I guess another thing just to point out, like as I'm backtesting this, like I'm totally fine playing either side of this range. I think, like, again, if you are using a high time frame bias, if you notice the trend is in one direction, you're only going to take trades in that direction. But using the fixed 2R TPs, like, we can trade either side of it. I just, like, if it then came down to this to the downside again. Like I'm not gonna try multiple times over and over. Just like for the day, I'm okay if it goes below taking longs and if it goes above taking shorts. But yeah, just kind of simplify things without needing a high time frame bias. So let's see if we get tagged into this one. And unfortunately, got a loss. All good. We had everything else. This is again super tiny BPR. Um, Maybe when you optimize, you want to see like a BPR that's more than like 25 cents. Maybe you need to see something a little more significant, but it was like an overlapping fair value gap on each side, so I think it was valid for that reason. Otherwise, only 10 minutes left in this session. We have an overlapping fair value gap here? Again, looks like a really small one. So yeah, again a 25 cent tiny VPR here. We are coming into news. It's the only thing I'm worried about. What is this? Presidential speech. If I was taking this personally, I might pass on this because we're literally like 9 minutes out, and I think the average duration was maybe like half an hour for these. So I probably just pass on this because there's news coming up. Coming news. But if we'd have been able to enter like here and we were still in this trade, then like I might be more inclined to kind of just let it play out. As long as you don't enter like right around the news. That's the main thing. And yeah, save this from a loss by not trading right during news, which is kind of the whole point. So I'll go through a few more examples and then we'll take a look at the analytics and see if there's any insights we have just from the kind of month we've tested. Coming up on Friday, let me make sure I have this drawn correctly. So mark out the high and the low. We have not swept the high yet. We've got some relative equal highs up here that we could see a draw on liquidity. We've got some news, so we need to just wait for all this to play out initially. What is this? PMI. We got a bullish fair value gap right here. Now we've got one up there as well. So if we see an inversion of these with the BPR, there's no bearish fair value gap. So this is a case where this fair value gap was inverted, but since it was red on red, it didn't meet our engulfing criteria for the breakout. So we wouldn't have taken a trade yet. Let's see if we can get a overlapping bearish fair value gap. Still no bearish fair value gaps. So sometimes the price action may play out as you want, but just the way the candles form, we don't quite get tagged into this. There just weren't any bearish fair value gaps. The wicks were pretty large, so we just never really got anything that overlapped. Like even though there's a big bearish fair value gap here, it doesn't overlap with this one we had previously. So we may just kind of miss this setup because yeah, there's no way we're gonna be able to take a short here at this point. Like the stop, it's like a probably 0.5 R trade if you're taking short at this point. So might just have to kind of sit on our hands and watch this one go to our where we would have been targeting. It just didn't quite meet our entry criteria, and that's totally fine. And you're not going to catch every move with every entry model. You just need to look for high probability setups and kind of wait for when they do meet your trade criteria. So no bullish fair value gaps yet. We have a bearish fair value gap here that's kind of already been filled. So we could potentially go off that if we see a move to the upside. Let's see. All right, so we have a bullish fair value gap here, but there's no overlapping fair value gap on the other side, so can't really do anything with that yet. All right, sorry, I just missed. It's gonna be it looks like it's probably gonna be a loss, but we did have a engulfing trade right here, so I'm gonna go ahead and record it to make sure we have analytics that are accurate. So we came down here, had a bearish fair value gap, and then the next candle engulfed it. So this would be your breakout trigger because we inverted this fair value gap. It's a green candle. We've kind of got everything we need for this valid setup. As you saw, it's going to be a loss, but I'll record it so we are sticking honest and getting good data for our strategy. So this would be a market entry trigger 2 for the breakouts, and instant loss. But that's fine. We want to make sure that our analytics is accurate. So let's see. Potentially have a BPR here. Again, this is definitely not as ideal. Like in his video, these like V-shaped ones are definitely the highest probability. When you see like pretty immediate bullish and bearish fair value gaps, those are going to be like the strongest ones. This one is honestly kind of a stretch because like this bearish fair value gap was quite a while ago. I'll go ahead and give it a shot, but this may be an invalidation you guys want to add. That if like the first fair value gap's already been filled, maybe you don't want to count those anymore. But we'll give it a shot and just like see if this one plays out, if we're starting to shift to the upside. So play here. This will be a limit entry with the first trigger. This is also second attempt because we took that first one that was a loss. Let's see what we can get here. We got tagged in. And unfortunately, the second loss. So yeah, I think as you're testing these more, you're probably gonna have more success if you stick to ones like, honestly, this is probably a lot better. I don't know if we're gonna get we might not get a retest in this case. It's after the window anyways, but like this V-shaped formation, where we have a BPR here from these kind of overlapping fair value gaps, this is a lot better. Kind of from what he went over with his model. It's outside of the parameters for us to enter. So we'll go to the next day and see if it would have played out. I'm not gonna record it for our data though. Let me see, where did we go to? I don't remember where price was. So where was that BPR? All the way back up here. Yeah, it did end up going up quite a bit. You probably could have caught a win on that retest. And yeah, it did like barely come back to retest it. Sorry, I gotta zoom in so you guys can see better. Yeah, it did come back. We would have had a win. It just would have been outside of the first 90-minute window that he talks about. So but yeah, those V shapes are definitely a lot higher probability for sure. So we'll do well, 1 or 2 more days, and then we'll take a look at the analytics now that we've got almost a full month of data. So see if we can sweep either the high or the low. Sweep the low, look for a BPR potentially. All right, this is another, no, it's green on green, so we didn't have this was a inversion of this fair value gap, but it's green on green, so it wasn't a valid engulfing yet. All right, no. Again, yeah, I think this will be a valid breakout, but again, it's going to be another one of those where maybe you want to use the tag to isolate fair value gaps that have already been filled, because this is also one of those cases. I'm going to go back 1 candle here so I can record this breakout. So we have a engulfing candle that inverts this previous bearish fair value gap, could potentially be a breakout here. So I'm going to go ahead and do a market entry and just use the low as the stop loss. We can get 2R before the 8 to 9:30 a.m. high, so we can go ahead and this one meets all of our criteria. Market entry with entry trigger 2. It's our first attempt. Again, maybe you want to use a tag to isolate ones where the initial fair value gap's already been filled. But let's see how this one plays out. Nice win. And again, the whole point of these is that you're expecting there won't be a retest, basically. And that's exactly what happened in this case. And so since we did a market entry, we were at least able to catch this move. We've got an hour left in the session, and now we've swept the high. So we can potentially look for a reversal the other side. And now we have a potential breakout to the downside. So bullish fair value gap, engulfing candle, inverted the fair value gap. And try another market entry here. If this market order place works. So this is another breakout. And again, maybe you want to use like entry trigger 3 or something to isolate these ones that are on the other side after a win or something like that. Because yeah, we end up having a loss. So 1 win, 1 loss on this day. I'm not going to complain too bad. But yeah, let's go ahead and play the rest of this. We still have another time for a potential second attempt, but we may just also trend to the upside. And yeah, this like I see some comments in the chat about using US 100 instead of NQ, and futures in general are probably going to be better for like the 1 minute time frame, simply because you're going to have lower spreads and just like better liquidity. And with CFDs, like I think you might want to try like a 5 minute time frame. and see if you can find the same patterns. It's the same thing with like gold or forex potentially. Like the 1 minute time frame is honestly really challenging with CFDs because of the slippage and the spreads, which you can bake into your backtest to get some good data. But yeah, it's features in general just like have very tight spreads, which makes it a little bit better for the 1 minute time frame. So you can definitely test it to see if it's something that's profitable, but I definitely recommend adding the spreads and commissions. And if you're not sure like what settings to use of those, definitely feel free to reach out in the chat and we can make sure you have those. But we got one more potential attempt here. It's probably the last trade of this day before we take a look at the analytics. So we have a tiny BPR here from this bullish fair value gap, and this engulfing candle to the downside did close below it. So we can potentially try another breakout right here. It's definitely going to be a second attempt for entry trigger 2, attempt number 2. Let's see what we get. Nice. Almost hit our stop loss, but not quite. And this is like a perfect example. Like you 100% would have gotten stopped out on this with a CFD pair. So spreads on futures are a lot smaller, so you could get away with this. But this definitely would have been a loss on CFDs. So just something to note. There was no BPR that formed initially. We had actually one down here, so you could potentially have a second entry with a BPR retest at this point. Yeah, let's give it a shot. Somebody in the chat wants to see how that would have worked too. So we've already cashed out this breakout to our win, but yeah, we have another BPR right here from kind of the overlapping bullish and bearish fair value gaps. So we could do a limit order at this point and target out 2R. It's a much bigger move, obviously, with the limit order, but let's just give it a shot. So entry trigger 1. I wouldn't say this is a second attempt because it's not after a loss, but if otherwise I would. So let's see how this one would have worked out. The longest trade ever. All right. Well, that again, let's see how far it went up. It went up only 1.33R, so it wouldn't have been profitable. There was a super huge like imbalance over here that we dug into, and it kept providing support. So something that you might see is like I think I've gone over it in a couple of videos. Like trendline liquidity is also something that's going to help. In this case, there weren't really like any lows along the way to like for us to catch people's stop losses to help propel us to our take profit. So when you need like a larger move like this, looking for trendline liquidity is that like definitely a really helpful confluence that we didn't have in this case, which just made it a little lower probability. So let's take a look at the analytics. We're pretty much at the end of the month. I think we should have at least like a decent amount of data from this. So 50% win rate, 18 trades that we saw. Overall about 9R. Honestly, can't complain with that with the average 2R system. Like that's profitable, and we have again it looks a little jagged with only testing a month, but as you test this over time, would anticipate like a pretty smooth equity curve from this. But yeah, let's take a look at the rest of the analytics. So we had 3 losses in a row, 5 wins in a row. All of this was during New York, obviously. We were only trading a couple hours a day. I'll pivot this to the UTC -4, so we're looking at the same time zone that we were trading in. So let's see, we had most of our profits in the second hour. So there's actually only 2 trades that populated in the very beginning, which makes sense. Like as market opens, you know, you've only got a 30-minute window basically for it to invert that or sweep a higher low and then form the BPR. So there probably just weren't many trades in the first section, which is fine. It was still profitable a little bit, and we only made like 1R. Win rate by day, let's see, Thursdays and Fridays were our least profitable days. I'm not going to give a whole lot of weight to those with our low sample size, but as you build this up, maybe you'll identify that certain days of the week just aren't good, or maybe you like want to crank up the risk a little bit on Wednesdays. In this case, like if there's one day that's just is really good, you might want to play around with a little bit of dynamic risk. But yeah, overall, like 9% in a month with any strategy is great, and like I mentioned, Januaries are often pretty challenging with, coming after the holidays and maybe a little more choppy, but honestly, a little more choppy might be better for this strategy. So could have worked out in our favor. But if this is something you want to trade, I always recommend getting this up to 50, 100 trades plus initially, and then audit it, make sure you didn't miss any trades. Maybe run some optimizations like I talked about to see if there's little things you want to tweak to try and improve it. And then once you have kind of your final rule set, build this out to like 200 trades. So you have really like verifiable data over multiple market conditions, and you feel really confident in like the expectations that your strategy is going to give. But overall, like I think this is definitely a strategy you guys can backtest and potentially trade. There's a lot of little tweaks that you might want to play around with your strategy. I actually do want to kind of see what the entry trigger 1 versus 2 looked like, because we have those breakdowns as well. Interesting. So using the retests, we actually had a slightly lower take profit. So if you only did the BPR retests, it was still profitable, still 3R, but definitely not as good as using the breakout. So it does look like adding that breakout trigger improved our results quite a bit. We had a higher win rate, almost 56%, and we got 2/3 of the profits from the session or the month. 2/3 of the profits we got in the month were from this new trigger that I added. So it's definitely something that you guys can consider adding that will help you kind of catch those trades that don't have any retests. But yeah, that's gonna, and then the same thing with second attempts. I'm curious of the trades that we took a second attempt after a loss. Wow. Looks like it's pretty good to take the second attempt. And yeah, I'm not surprised. NQ, pretty similar to crypto. Oftentimes, like even if you're at like a good level for a reversal, oftentimes that first one will not work out. So I'm not surprised that the second attempt is a lot better. And again, maybe if you're someone that is open to dynamic risk, if you identify specific trade setups or days or something that are above average, win rate, then you can consider like maybe going a little higher risk, or vice versa. If there's certain days that aren't as good but still profitable, maybe you want to go half risk on those days. It's something you can play around with as well, with kind of a dynamic risk. But yeah, let me know if there's any kind of questions in the chats. I always love going through the analytics because there's so many insights of all the different cuts that you can get. You do need to take advantage of those tags while you're backtesting to make sure you have the data. But yeah, really good information that you can kind of take a look at and just kind of learn like the ins and outs of the model you're trading and find any little fine tuning that you can make a little better. But yeah, I hope you guys enjoyed this. We spent about an hour, but I hope I showed you a lot more examples than ICT's monologue. And someone just noticed today there's a BPR during the AM session on MQ. So yeah, this is definitely something that has a trade more days than not. And so it's definitely something you can, I definitely recommend backtesting before you jump in live with this, with any strategy. Like it's really important to get the data and get the reps before you start trading anything live. So highly recommend spending some time backtesting it before I see the trade, I need to take it. But it definitely seems like a exciting one that hopefully you guys can kind of play around with and see. But let's see, any more questions in the chat before we wrap up today? Yep, someone's gonna be spending all weekend backtesting. That's how I used to do it all the time. So yeah, thanks so much for joining today, guys. Again, if you need the strategy PDF, it's going to be in the links below for the YouTube. And if you have other recommendations for other strategies, we've got a feedback form in the Discord and also in the description on YouTube. You can kind of give me the source of what strategy you want, whether it's a YouTube video or Instagram reel or something, so I can like really properly learn what the strategy is. But yeah, hope you guys enjoyed learning ICT's new 2025 Venom model, and hope you have a great weekend. I'll catch you guys later. See ya.